This is our Forex blog for March 3rd, 2011. And like we do most days, we really want to find super strong currencies to buy against some of the weaker currencies. At 8:30 today, for example, without a doubt, the euro became the strongest. And even before that, the daily, weekly, monthly trend was up. You saw a little bit of strength before, some weakness. The weakness leveled off. And a lot of times where you see, usually 2 or 3 hours of weakness is better than just an hour and a half like this. But when you see the strength or the weakness level off and die down, it's usually going to resume its longer term or previous trend, especially if it's in that direction. News at 8:30, and at 8:30 also the yen became the weakest. The euro yen was the one to buy if you were trading at that time. It was just crazy strong, and you can see even before the news, the market's just kind of going sideways right here, kind of chopping around the hourly moving average, and then it breaks out. It breaks out over the highs, breaks out over yesterday's highs, and it breaks out over today's highs where it had trouble getting above it earlier. And it just absolutely took off, and you can see our statistical strength was just off the chart strong, and it just kept going up, 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 up. If it stalled here, exit half and then trail the other half. If it stalls at the fib target, which most of the time it's going to, exit half and trail the other half of your position. And then if it stalls here, you want to exit half. And this is so far above the upper band. Usually the second fib target is where the market stalls. And when it double topped right here with our counter trend sell signal, pretty good place to exit your trade if you haven't already at the first time. I did actually a counter trend trade here, expecting it to pull back to 114.50 and make 30 pips. I only made about 10 or 11 pips on it myself. It was pulling back. None of the other euro pairs were showing any signs of weakness whatsoever. Yen was still extremely weak. So, usually if currencies don't do what they typically do most of the time, they're going to try to go higher, or they're going to go sideways. I don't want to sit on a trade up to the high against a super strong currency like this if it doesn't pull back. I mean, usually you're going to get 20 pips doing a trade like that. Then the trend will continue after that, but you can usually make 20 pips counter trend at these fib targets when you're this far above the upper band. Now, another currency that was really weak at the same time was in New Zealand. So not only the euro yen explode up, but the euro New Zealand would have been a good opportunity too. And you can see this one, actually gapped up, so there probably wasn't any opportunity to buy it to all the way up here. It's never a good idea to pay up, really more than 20 or 30 pips maximum during news. So unfortunately, you probably would have missed this move. You did get one little pullback right here, but it's way above the upper band. So I don't think I personally would have taken the chance on that trade. But you can see when one currency is strong, the other one's weak. This is the kind of moves you get. Huge. It went up, 250 pips. Earlier today, we had a weak Swiss, which, the longer term trend's incredibly strong, but the Swiss has been going and going against many of the currencies for quite a while. So you'd want to look to sell this, even though the longer term trend's up. If a currency against most pairs is moving up or down, a couple days in a row, it's usually going to have a pullback day. The euro was a little bit strong earlier today. The Australian was, and let's see the pound. The pound had, bits of strength too. So you could have bought the pound Swiss, euro Swiss, primarily because those both have weekly and monthly trends that are up. Let's look at the euro Swiss coming into midnight today. You can see it's above the hourly moving average, which means it's more likely to go up. And it's just kind of had a really sideways range right here. It broke out over these earlier highs and exploded up. Hit the 10-day moving average. The previous day's high is your first profit target. This is your second. This is your third. And usually currencies don't move beyond the upper bands. And then you had kind of a pullback here where it couldn't go underneath the weekly pivot. You might have bought here. It pulled back again. Did break the hourly. So I'd be a little bit careful on there. But you can see it didn't really have any weakness at all on the down moves. You might have went long right here as it kind of worked its way up. And notice earlier it didn't really have that much statistical strength, especially compared to the before. So this is a great place to get out of the trade. It's not likely to go up at that point. Obviously news causes to go up later in the day. And if you were able to get into this trade because one of the currencies is strong and the other one's weak, it would have been a good deal. Pound Swiss also. Now this one, you mainly want to look for buys if they're above the hourly. So, coming into midnight today, it pulled back, found support at the hourly. This one not nearly as good as the Euro Swiss because the weekly monthly trend are so weak. But if you did take this little sideways, consolidation breakout right here, previous day's highs, your first profit target, and somewhere between 30 and 35 are your most likely maximum target. Anytime it goes up and doesn't have extreme strength, you really got to look at resistance. If it shoots through there, then get out of the trade here. If it stalls here, exit there. And then you had a beautiful type of trade. It's one of my favorite. I don't rarely take them because I'm not trading when they happen. You got an Elliott two-wave pullback. You have a trend up, pulls back, doesn't go up and make higher highs, pulls back again, and usually by that point, all the selling's out, and it's a pretty safe, high probability trade, especially if you have the hourly and other support right underneath it. So as it's kind of going sideways right here, you might have got in somewhere here, and of course it went up, did break the previous high, and then stalled where we anticipated it stalling before, and notice it had less momentum that time than before. So exit the trade, and you really, anytime you see a double top or a slightly higher high with less momentum and the longer term trends down, you really might want to look for a counter trend trade once it comes back underneath the previous day's high. This is a false breakout, and usually professional traders put their stops right underneath the support area. If a area is resistance, where there's usually selling, breaks out, then it really should stay above that area where the trend's nullified. So a lot of stops were put there, and that's probably that, and probably news at the time was one of the reasons why it fell. Looking at the pound dollar today, you can see the longer term trends up, and it kind of hold on a second, this is the previous day. Here, let me scroll to today. Here we go. This one's kind of just going sideways here right at the hourly with no trend. This was obviously a news trade, but once when the longer term weekly and monthly trends up and it comes down to the lower containment band, and it had a lot of weakness right here, but as it's going sideways right here, the weakness is gone. Usually it's pretty safe to buy the lows and expect a pullback up to the hourly moving average. There was an even better one in the pound yen. This one also went sideways, had two narrow range patterns right around the hourly, broke out. This is a pretty safe trade given the fact that it wasn't able to go up. Low volatility tends to suggest traders are kind of waiting for something, and you go short right here. In the lower band or the monthly pivot right here is a good profit target area. It was pretty weak right here. If the weekly and monthly trend were down, I definitely would have considered selling this little pullback right here. You draw a trend line underneath the lows, you get short when it breaks, and again the same exact thing. Slightly lower low with 1/3 the weakness of before. It's also got some counter trend buy signals right there, and the longer term trend, the weekly and monthly trend is up, and the daily trend just shifted down, and it's not really that weak. So it's a pretty high probability trade down here, and if you don't get in down there, wait for the 1, 2, 3 low, which oftentimes happens after that. It comes up, pulls back usually 50 to 62% of this counter trend move, and you can see it was green at that time. Other pound pairs are going up, yen pairs are going down, and if you didn't get in more aggressively down here, this is where I would have entered. I'd rather take a small hit than have to pay up to get into a trade. When it breaks out right here, it's very likely to go back to the hourly moving average. The 20 and 10-day moving average were the likely areas where the profit target was going to be, but news at the time just made the yen super weak, and this caused it to go all the way up to our trading zone area. Because this one was starting at a lower point than the euro dollar, which was strong before the move. This one was really weak before the news. It was underneath the hourly. Pretty decent place to get out. I mean, let's see what other patterns we have. You can see this one, the euro dollar was kind of chopping around. Never really came down to the lower containment bands, and it also never really had any weakness. The weekly and monthly trends up. The daily trend never shifted down. So when the news come up, great place to get in. Fib target up here, next profit target. And it went past that all the way to the monthly R1. This one actually had more of a pullback than the other one. I wish it, looking back on it now, I would have sold the euro dollar versus the euro yen. I would have made a lot more pips on it. Just going to try to find some other. Now, this currency's weekly and monthly trends down, but the price is above the hourly. So, if it's not up too much and you see it kind of chopping around and you get a breakout over the highs, you might consider getting into it, but be really careful at resistance. I would have exited the trade right here because there wasn't a whole lot of real-time strength and the longer term trend's down. Tomorrow, because this fell the previous day, it's having a counter trend day to day. If it goes up and makes another big move up tomorrow, you might want to sell the high because the weekly monthly trend's down. Draw your fibs from here to here. Fib target might be 93.60 to 9400. If our real-time momentum tools aren't that strong, probably a pretty decent high probability short for tomorrow. This one has a weekly monthly trends down, but it's above the hourly. When you get a breakdown underneath the hourly, usually most of the time they come back up and test the hourly, and when it starts to go back down again, you want to go short here. And you can see as this is making a lower low, there's just not a whole lot of momentum to the downside. The dollar's not weak at that time, and the CAD's not strong. Another trade that you might have taken because the longer term trend's down, draw your fibs on this first wave up, and when it hits that fib target, it's kind of an Elliott two-wave pullback. I prefer to sell Elliott two-wave pullbacks underneath the hourly and buy Elliott two-wave pullbacks above the hourly. But this is one of the weakest currencies that we watch. This and the dollar Swiss. So when it had a counter trend sell signal right at the half, you might have gone short there half an hour ago, and you're up 14 pips so far, and there doesn't appear to be any reason to get out. If it can't break the hourly, you might want to exit here. If it breaks it, wait for the momentum to run out and exit lower. Here's another good example of a double top, and it never had strength before. Yesterday it never really had strength. I was telling traders to sell the 75 yesterday, which led to about a 15 pip profit, and that level today held too. I wouldn't have necessarily sold it today. I would have drew my fibs from here to here and really only considered selling it at maybe 1.0 to 10 to 30, wherever the fib targets are above there. We can't see them. Now here's a nice trend trade. New Zealand dollar is one of the weakest currencies. The weekly monthly trends down, and this is the same kind of thing you saw with the dollar CAD, I believe. When you have a move up, especially if it doesn't have that much strength, draw your fibs on it, and from here to here. And if it hits the fib target without that much momentum, consider selling. It only pulled back about 20 pips, and then it came back up again. If you sold here, you might have lost. It made a slightly higher high. Look, the barely momentum before is less. So selling higher highs when the momentum is slowing down, when longer term trend's weak, pretty decent trade. You go short there, you expect to pull back to the hourly, and if it breaks that, you just kind of hang with it. Most of the time, when you get a nice big move like this, you can draw your fibs on the first wave. The bigger it is, the more likely the fib targets are going to hold, and you either want to exit at the first or second fib target. In this case, it kind of stalled at the first one. I would have exited half and moved my stop above the highs, and usually exit all of it at the 1.618, but the price broke underneath there. It is going down with less momentum than before, so the first sign of this starting to not go down anymore, probably right around now, I'd be looking to get out of the second half because it's right near the lower band, and it's had a pretty decent fall. We already went over the euro yen. Anytime you get a sideways range for so long, any kind of breakout over the high or underneath the low tends to work, but they work better, and you have a higher probability trade when the weekly monthly trends up, like you can see. This one barely has a weekly monthly trends up. It's kind of chopping around, and it also broke out here over these highs. You might have exited half your trade here and the rest up here. That didn't really have that kind of momentum. New Zealand yen, extremely weak. You might have considered, actually you wouldn't have wanted to sell here because it was pretty strong at the time, but when it double topped with almost no strength, longer term trends down, right near our upper containment band likely highs, not a bad trade. This one also, weekly monthly trends up, it's kind of chopping around. When it breaks out over its highs, just absolutely took off. Usually the upper containment bands, trading zones, are the likely high. If it doesn't have plus 20 or more strength, you want to exit up there.